The Rebel Capitalist Show.
I'd like to kind of go back in time. And I was listening to your recent podcast episode where you told a story of 12 years ago, ironically enough, you went to a town in China called Wuhan. And you saw that they were building all of these real estate apartment complexes or office buildings, I'm not sure which. And and you saw an issue there of overcapacity, oversupply. And you thought, maybe this is an angle from an investment standpoint. But you said that you were too early. And this got you thinking about the difference between the US calendar, which is based on, or the let's say the calendar of the West, that's based on 12 months compared to the Chinese calendar that was based on 12 years. And I think the takeaway there was you got to think that maybe that was the right trade at the wrong time. And I was just 12 years early, and maybe kind of that's what we'll see play out now, which would make sense when we're looking at this and considering what's happening with Evergrande. They actually technically defaulted, which would be obviously a result to some degree of overbuilding in the Chinese economy, which you saw as clear as day when you were there 12 years ago in Wuhan. So can you kind of walk people through that story and then some of your own personal takeaways reflecting back on that now?
Yeah. So I am a retired global macro hedge fund manager. And I was an orthogonal investor. I was a diversifying agent. If you knew what was going to happen to the S&P, you would have no idea what my performance was going to be.
Right. So uncorrelated, right?
Uncorrelated. That my gig was on uncorrelated returns. My gig was not to rack up the highest returns. My gig was to produce an independent set of uncorrelated returns, right? Where the carry cost was minimal. And so anyway, Raul from Real Vision, back in the day, he beat me. He went to China and he was walking around doing the same thing going, skyscraper, empty, skyscraper, empty, skyscraper, empty, skyscraper, empty. And I thought, I've got to go. And I was coming off the back of, I made, 31, 32% in the carnage of 2008. And in March 2009, myself and some of my team, we took a slow train. We arrived in Hong Kong. We walked over the border and we took a slow train. Wuhan is right bang in the middle of China. And that train takes it was really slow. And I published my version of Raul's on it. Skyscraper number 1, empty. So I came home and I launched a blow-up fund.
Yeah.
And I had the volatility was so cheap. Let me tell you as a measure of that, because we did two things. We went very long Australian 10-year treasuries. And this was towards the end of 2011. So the germ of the idea was on the train in March 2009. And by the end of 2011, I raised $100 million. And with the $100 million, I leveraged it 10x. Okay. And if it came to pass, this was my Soros moment. I was going to make $1 billion.
But the Aussie bonds were trading, wasn't it like a 6% yield or something like that?
6%, right? So, because remember, this was the 2 years after the advent of quantitative easing, which was going to be Weimar hyperinflation. And of course, Australia was, and of course, all the commodities had rallied after 2008, and the Australian housing market was still on fire. So 6%, and we're like, if China goes down, there is a lot of convexity in the price of Australian sovereign bonds at 6%. And that
you were long. So the idea there is if China goes down, then the yield, everyone's going to pile into Aussie bonds, therefore increasing the price, dropping the yield. Okay.
And another rationalization had been, I was comparing China to to Germany. I was using a Neil Ferguson argument from his Ascent of Money. And he maintained that part of the problem the Germans were confronted, part of the problem after the loss of the First World War. So Germany was the China to the UK being America. Yeah, in terms of the UK had been the dominant major economic force, and Germany had then adopted the Industrial Revolution 50 years later, but the adoption cycle was very, very rapid, and they were boom, the next major power. And it was like China, like when the world gets its mojo, you go to either Germany or China and you buy stuff. And so the argument was that German elected politicians at the time said, okay, we lost the war. That was not so good for us. But as sure as day follows night, the world economy is going to recover. And as the global economy starts, like not buying stupid guns and bombs, but buying chemicals and all the rest of it, we're quids in. We're going to make a lot of money. So there's an argument that Germany put its foot on the gas and said, listen, as a government, we should expand. We should build bridges to nowhere or whatever, in the anticipation of this economic rent that we're going to achieve when America comes back fully on stream, when the UK comes back fully on stream, when the consumer's buying, where there's no rationing, etc. We're going to make hay.
Right.
Except that didn't happen. There was actually, weirdly, there was a deflation of 1920, 21. The US hiked rates and the economy hit a wall.
In the US, yeah.
And I was like, whoa, no one told us. So the same thing happened. We have to acknowledge that after the calamity of the US housing crisis in 2008, China stood up and said, we're the bridge to tomorrow. We will accelerate our spending and we will be the locomotive which allows the global economy to recover from this bad situation. And I say, well done to them. But my thesis was, what if this 2008, what if it's followed by a depression and not a V-shaped recovery? All this saving the world, you're going to be vulnerable. You're going to have spent all this money like the Germans did with the anticipation, but not enough's going to come back to pay off all your debts. That was my hypothesis.
So, but did you think that their response, if they had this deflationary wave, that their response would be money printing as well?
Yeah. And money printing can take many forms. Money printing in that theater would ultimately end up probably being a devaluation of the currency. But no one told me, because the zodiac thing is, it takes a year for the Earth to go around the sun. And that's the premise of the zodiac and all that nonsense. The Chinese are fascinated by the rotation of the planet Jupiter around the sun. And it takes Jupiter 12 years. So things happen slower in China. And so my observations may have been relevant, but they were catastrophically out of synchronization with the rhythm of Chinese society. Let's review. So I told you 12 years ago, I was on a train. I saw overbuilding. Let's review the situation today. Okay?
Right.
Because it's astonishing. So there are 50, what is the figure? There are 55 million unsold apartments or uninhabited apartments in China today.
And how many have been paid for that haven't been built? I'd even ask that question,
Let me come back to that. That's
on top of that, right?
That's a really good question. Let me come back to it. Let's hold on. 55 million, where no one's living in. Under construction. And to your point, paid for 93 million
Wow.
units. Okay. So the flaw that I made in 2009 was there was still 12 years. And over 12 years, you had enormous GDP growth, you had urbanization, and you had population growth. You have none of them now. I mean, the economic growth is coming down to like 4.9, a good figure, but nothing like the 12 to the 17% figures they were doing previously. Population is now contracting and urbanization has finished. Just the completion of those existing units will provide enough housing, new housing for China until the year 2050.
Wow.
The valuation of Chinese property today is 8 times GDP. More than that, the valuation of Chinese property is between 2 and 3 times. The absolute number is 2 to 3 times greater than all of the real estate in America.
Wow. Yeah, and their real estate business or construction, that represents about 20 to 30% GDP.
Its contribution to GDP is 27, 28%. Now, the financing, where it's interesting is Chinese, I missed this, but Chinese property companies were a fantastic business, George. I should have been investing in Chinese property up until 2-3 years ago. Why were they fantastic? If I do you're the property guy, you're the expert, right? So in London, if I do a speculative condo build, I can get about 5% from prepayments from people who want to live there.
Right.
You can secure it like off the architectural plans and the little showroom, and you'll raise 5%. In China, you get 100% of the funds once the building is 1/3 complete, which is to say that you are able to eliminate the risk. When you're paid for, who cares, right? There's no risk. Done. Okay. And you move on, you move on, and you move on, and you move on. So what does that remind you of, George? That is the business model of Countrywide Financial and Washington Mutual and all of the bankrupt US banks and mortgage originators from the period 2005, 2006, 2007, where the people who were supposed to know what was going on, they didn't have a frigging clue because they were too busy, like passing it on, selling it into, CDO mortgage-backed, securities. Yeah. And in that ignorance, the thing festered and got big, 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 and then went boom. Now, US house prices. So again, we work on a different system. We're hyperactive, we make mistakes, but we discover mistakes and we deal with them. And we deal with them through the mechanism of price. So in the aftermath of the problems of 2007, US house prices fell 36%.
Yeah.
And that's an enormous figure because remember, the housing stock was valued at 2 times GDP, which is to say we lost 3/4 of 1 year's GDP from that housing mistake. Now, put those numbers into China, 8 times GDP, and like the overbuild is way in excess, but let's say that the price needs to correct by the same figure of 36%. Multiply 36 by 8, that's 2.5 years of GDP that goes boom, 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 boom. So, and yet, speak to a macro guy and they're like, yeah, the green revolution, I'm buying copper, I'm short the US 10-year treasury, we're going to have inflation because of the great resignation. What about China?